Well, stocks have been on a tear of late, but oil dragging markets down today. Eddie Ghabour says it's time to buy, but David Scranton says, hey, not so fast. Eddie, give us the reason why we should be still buying this market.
Well, I have no doubt that we're going to be in this continued volatility for the foreseeable future. But investors should be buying these dips because we believe this bull market still has room to run. Look at the environment we're in right now. We have slow economic growth, probably for the foreseeable future, a low interest rate, rising interest rate market environment for the foreseeable future, and the average investor on the street is very, very bearish when they talk about stocks. If that's not a perfect environment to continue to stay in the market, I don't know what is, as long as you're not taking too much risk based off your age and risk tolerance.
You know, David, it's interesting when someone says a slow economic environment is the perfect backdrop to buy stocks. That wouldn't be logical for many people, would it?
No, not at all. In fact, the slow economic environment, you're talking perhaps a 1% GDP over the last 3 quarters. And I'll make a silly analogy. I'm sure you've flown out of LaGuardia Airport before. Well, LaGuardia is known for having some of the shortest runways of an international airport. And the reality is that, imagine if you were in an airplane where the pilot suddenly said, look, runway 4 is only 7,000 feet, but we generally need 8,000 feet to land this airplane. But I'll tell you what, we have a temporary gusty condition, which is going to allow us, it's favorable, it's going to allow us to land in a shorter runway. So we're going to make this landing. The question is, as a passenger, do you want that pilot to take that risk knowing full well that if the gust suddenly stops, you and your airplane are in the East River?
Why is this
or do you
runway
want to go
so
to
short?
JFK and land on it? What's that?
Why is this particular runway so short, though, right now? Why have you limited to a certain amount of feet? In other words, why now is the market topped out? What specifically about this market makes you so concerned?
Well, first of all, the slow growth that your other guest had mentioned, but also, if you think about when the market blew through its resistance levels, it was right after Brexit about 6 or 7 weeks ago. And the same 2 reasons why it went through those levels are the same 2 reasons why the stock market should be going down, not up. First is low interest rates. The interest rates drop, which push people up the risk curve into the stock market. But the question is, which interest rates dropped? It wasn't short-term rates, it was long-term rates. So what's really happened in the real world is the yield curve has flattened, which is bad for the economy. In fact, that's a sign of recession when the yield curve gets too flat. The second reason the market went up after Brexit was because it was a flight to the dollar. Well, that's great, and it's great that all dollar-denominated assets go up, including our stock market, but the question is, what does that do for the profit margins of our companies that try to export goods and services?
Right. You know,
it's
Eddie,
bad for their bottom line.
Well, Eddie, a lot of times when I do, I'll jump in and then I'll add.
Okay.
But a lot of times when I do my work, I work in constant currency, so I can take out some of the noise of currency fluctuation, but it seems to me if the dollar does start coming down, that will be pretty great for these multinationals that often can take a market higher, certainly the big averages.
Absolutely. Look, there's been a misconception that you have to have a very strong and robust economy to have a strong stock market. We've proven over the last 7 years, this is one of the slowest recoveries we've ever had, yet the market continues to be very resilient. And anytime we have a correction or a small dip, bears come on your show and scare investors into getting out of the market. And that's why a lot of retail investors have really not participated in this upswing over the last 7 years. There's a lot of cash on the sidelines right now. And when that cash finally goes into the market, that could be another leg up here in this equity space. Right. So, not to mention if we have any type of corporate tax reform to bring the $2 trillion that's overseas back here. So I think a lot of times people focus too much on the negatives out there versus some of the positive catalysts that could continue to take us to the next level here in the market.
Well, one thing we do know is that a lot of people have missed this rally, and calling tops is a dangerous game, although you never want to get caught in one of these downswings. Guys, you both presented your ideas great, and I appreciate it. We'll do this again. Let's do it in a couple of weeks and just see where we are. Thanks a lot.